All right, everybody, welcome back. We are going to do a really cool deep dive today. We're looking at all kinds of financial products today.
I'm excited.
Yeah, this will be fun.
It's a big landscape.
It is. It is. And this is one of those things that I think everybody uses in one way or another, but maybe they don't always know.
Right.
All the ins and outs.
The ins and outs, yeah.
And all the options that are out there.
Absolutely.
So we are looking at an excerpt called Pasted Text, which is all about...
Catchy title?
Yeah, super catchy, right?
It is.
But it's all about financial products. And so we're going to go through all kinds of different ones.
Yeah.
And break them down into maybe some things that you've heard of, some things that you haven't.
Definitely. And I think what's really cool about this, too, is we'll be able to highlight how some of these can be used for different purposes.
That's right.
Right. So we'll give you the rundown of what it is, but then how can you actually use it to benefit your financial life?
Yeah, because that's the thing. This stuff can get confusing.
It can.
I think sometimes people don't want to talk about it because it feels...
Overwhelming.
Yeah, it feels overwhelming, and there are
so
many words.
that you've never even heard of.
Yeah, and it's like, I don't even know where to start.
Totally.
So that's what we're going to do today. We're going to start at the beginning.
Awesome.
So let's start with checking accounts.
Okay.
Which is something I think probably everybody listening to this has in some form or fashion.
Yeah. Foundational.
Yeah. This is your basic, like...
Your everyday spending.
This is your wallet.
Yeah.
This is how you buy your groceries.
Exactly.
Pay your rent.
That kind of stuff.
That kind of stuff.
And they're really set up to handle those everyday transactions. So, think about deposits, checks, electronic payments, ATM withdrawals. Yeah. All of that is going to flow through your checking account.
Exactly. And that's kind of, I think, what people get used to right when they're getting started with their finances.
Right.
They're like, okay, I have a checking account.
That's where my paycheck goes. Yeah. And then it's where I spend from.
Okay.
And that's all there is to it.
But there's so much more.
But there is so much more. Yeah. And to be fair, I think, checking accounts are not necessarily designed for you to grow your wealth.
Right.
They're really designed for you to have access to your money, to use it.
It's for convenience.
It's for convenience, exactly.
Yeah.
But as we move into some of these other products, we'll see how you can actually start to put your money to work for you.
So like savings accounts.
Oh, okay. Yes.
So if checking accounts are like for spending, savings accounts are for saving.
Makes sense.
Right.
Yeah.
And so this is where you would put money that you're not planning on spending immediately.
Right, like an emergency fund.
Yeah, or
maybe a down payment on a house.
Right. Or maybe you have a big vacation coming up, or,
Yeah, you're saving up for something specific.
You're saving up for something, but you don't need it right now.
Exactly. Yeah, so it's providing that security. Like if something unexpected happens, you've got that cushion.
Right. And it's important to point out, too, that savings accounts typically...
They do pay interest.
They pay interest.
It's not going to be a ton.
Right.
It's going to be more than a checking account, generally.
Usually, yes.
Yes.
But
as you mentioned earlier, we're going to talk about some other products where you can really see that interest start to work for you.
And that leads us to CDs.
Okay.
Certificates of deposit.
Yes.
Now, I will admit, this is something that I don't know a ton about.
Okay.
So...
Well, let's break it down.
Yeah, break this down for me and for everybody listening.
All right. So a CD is essentially you are agreeing to lend a bank or a financial institution a certain amount of money for a specific period of time.
Right.
And in exchange for you doing that, they are going to give you a guaranteed interest rate.
Okay, so it's like a higher interest rate.
Typically higher than a savings account.
Okay.
Yes, because you're locking it up for a longer period of time.
Okay, so there's a little bit of risk there.
There is some risk, yeah. The main risk being that you can't access that money without penalty.
Okay.
Before that maturity date.
Got it.
So it's really for money that you're okay with setting aside.
Right.
Knowing that you won't need it for a while.
Okay,
Yeah.
Cool.
Yeah.
So that makes sense.
And this is actually a good time to bring up this concept of liquidity.
Okay.
Because we've talked about checking accounts where your money's very liquid.
You can get it whenever you want.
You can access it immediately.
Right.
Savings accounts, a little bit less liquid. You might have some withdrawal limits. CDs, even less liquid because they're locked up.
Right.
So as you move through different financial products, that's something to keep in mind.
That's interesting.
Yeah.
I never really thought about that.
It's a spectrum.
It's a spectrum of how quickly you can get your hands on your money.
Exactly.
Okay, so we've talked about checking savings CDs.
Oh, okay.
Now let's talk about...
The fun one.
Well, I don't know if it's fun, but...
For some people?
Let's talk about credit cards.
Okay. Everyone's favorite topic.
Look, I think credit cards...
They're a tool.
Can be incredibly useful.
Absolutely.
And incredibly dangerous.
Yeah. Both sides of the same coin.
Right. And it's all about how you use them.
It is 100% about how you use them.
Right.
I think a lot of people get into trouble with credit cards because they don't fully understand
Terms,
the interest rate,
the fees, all of that stuff.
Right. So let's talk a little bit about how credit cards work and how to use them responsibly, because I think that's
key.
That's the key takeaway here.
Yeah. So at its core, a credit card is essentially a line of credit that the issuer is giving you.
So you're borrowing money.
You're borrowing money, essentially.
Okay.
And you have a certain limit.
Right.
Up to which you can borrow.
And then you pay it back.
And then you pay it back.
Ideally.
Ideally, yes. Ideally in full every month.
That is ideal. That is the ideal scenario, because that's how you avoid paying interest.
Right. And that's where people
Yeah, that's where the danger comes in.
In trouble. Right.
Exactly. Because if you don't pay your balance in full,
those interest rates can be
sky high.
Yeah.
And that's how people end up in revolving debt.
Right. And so this is why it's so important to really know what you're getting into.
To have a budget to track your spending.
Yes.
And to really treat a credit card like it's your own money.
Right.
Even though it's not.
Right. Would you agree that maybe one of the most important things to look at with a credit card is that interest rate?
Absolutely. That and the fees.
And the fees.
Yeah, because sometimes those fees can sneak up on you.
That can.
So you might have an annual fee. You might have balance transfer fees.
Right.
Late payment fees. All of that stuff can really add up.
So do your research.
Absolutely.
Read the fine print.
Yes.
So
credit cards can be a great tool for building credit, which, as we'll talk about later, can help you with things like getting a loan for a car.
Or even a mortgage.
Or a mortgage, exactly.
Right.
But again, it's all about using them responsibly.
Okay. So let's talk about loans.
All right.
Now, there are a bunch of different types of loans out there.
There are.
Let's start with maybe like...
The big one, the mortgage.
Okay, yeah. Let's start with a mortgage.
All right. So a mortgage is a loan that is specifically designed to help you buy a home.
Okay.
And typically it's going to be a pretty large loan.
Right.
Because houses are expensive.
Yes, they are.
So this is where a lot of people will spend, a significant portion of their income paying back this mortgage over time. And mortgages typically have terms of
decades.
16 or 30 years.
Right.
So it's a long-term commitment.
It's a long-term commitment.
But it allows you to buy something that would otherwise be completely unattainable.
That's right.
For most people.
And there are different types of mortgages.
Yes.
So
you've got your fixed rate mortgage where the interest rate stays the same for the life of the loan.
Okay.
So you know exactly what your payment is going to be every month.
That's nice. Predictable.
Predictable, exactly.
Yeah.
Then you've got adjustable rate mortgages, or ARMs, where the interest rate can fluctuate over time.
So that can be a little risky.
It can be riskier.
If interest rates go up.
Exactly. Your payments could go up.
Yep.
So it's really important to understand the pros and cons of each type.
And to know what you're getting into.
Yeah, what you're getting into.
Because as you said, it's a long-term commitment.
Right, absolutely.
So you want to make sure that you're choosing the right product for your situation.
Okay, and so along with mortgages, we're talking about big purchases. There's also...
Cars.
Auto loans.
Yep. So similar to a mortgage, an auto loan is designed to help you buy a car.
Okay.
And it's going to break down the cost of that car into manageable monthly payments.
Okay.
Over a period of time.
Usually a few years.
Okay.
And again, you're going to have interest rates to consider. You're going to have loan terms to consider.
Okay, so it's important to shop around.
Very important.
Yeah.
Because different lenders are going to offer different rates and terms.
Absolutely.
Yeah.
Okay, so we've talked about mortgages. We've talked about auto loans.
Great.
What about
personal loans?
Personal loans, yeah. What are those all about?
So personal loans are kind of like the all-purpose loan.
Okay.
They can be used for a variety of things.
So this could be anything from
home improvements,
debt consolidation,
medical expenses,
a big vacation.
Yeah, anything really.
Yeah, right. And
that you need to borrow money for.
Right.
And personal loans typically come with fixed interest rates.
Okay.
And fixed repayment terms.
So again, predictable,
exactly.
Which is nice.
Which is nice for budgeting purposes.
Absolutely.
You know exactly what you're going to be paying each month.
Okay, so we've covered a lot of ground here.
We have.
We've talked about checking savings CDs, credit cards.
Loans.
All kinds of loans. Mortgages, auto loans, personal loans.
We're on a roll.
What else is out there?
Well, let's talk about the future. Let's talk about retirement.
Retirement accounts.
Yes.
Okay.
So these are accounts that are specifically designed to help you save for retirement.
Yep.
And they come with a lot of tax advantages.
Oh, it's nice.
Which is awesome. And there are different types of retirement accounts.
Right.
You've got your 401ks, which are typically offered through employers.
Okay.
You've got your IRAs, which you can open on your own.
Individual retirement account.
Individual retirement accounts, exactly.
Got it.
And these accounts allow you to invest your money.
Okay.
So it's not just sitting there like in a savings account.
It's actually growing.
It's working for you.
Okay. And this is where we get into the idea of like compounding,
Compounding, yes.
which is always fascinating to me.
It's like magic.
It's like magic.
It really is.
It's like free money.
It's like your money is making babies, and then those babies are making babies.
That's a great way to put it.
It's exponential growth.
Right. So the earlier you start,
The better.
the better.
Because you have more time for that compounding to work its magic.
That makes sense.
Yeah.
Okay. So we've got retirement accounts. And then for folks who maybe aren't,
As comfortable picking individual stocks.
right. Maybe they're not ready to like jump into the stock market.
Right.
What other options are out there?
Well, there are mutual funds.
Mutual funds.
Yes.
Okay. Tell me about those.
So a mutual fund is essentially a basket of investments
Okay.
that is managed by a professional.
Okay.
So you're pooling your money with other investors.
Right.
And that allows you to diversify your portfolio.
Which is a good thing, right?
Very good thing because it spreads out your risk.
Okay. So you're not putting all your eggs in one basket.
Exactly.
Right.
And it gives you access to a wider range of investments that
Right.
you might not be able to afford on your own.
Right. And so this is great for people who maybe don't have a ton of time to research individual stocks.
Exactly.
Or maybe they don't have the expertise
Right.
to pick the right
You
one.
can rely on a professional to manage it for them.
Got it.
Yeah.
Okay. So that's mutual funds. And then
Let's talk about insurance.
insurance.
Yes.
Now, this is one that
It's not about making money.
it's not about making money.
It's about protecting the money you have.
Right. It's about protecting yourself.
Protecting yourself from financial ruin
Exactly.
if something unexpected happens.
Right. Like a car accident,
A car accident, a house fire,
a medical emergency.
a medical emergency, all of those things can be financially devastating.
Right.
So insurance is there to help you mitigate that risk.
Okay. And there's so many different kinds of insurance.
There's
Health insurance, auto
Yeah.
insurance, homeowners insurance, life insurance.
right. And it can feel overwhelming
It can,
to know what you need.
but it's really important to have the right coverage.
Absolutely. Because as I said, those unexpected events can really throw a wrench in your financial plans.
Yeah, nobody plans to get into a car accident.
Right.
Nobody plans to get sick.
But it happens.
It happens.
And it's better to be prepared.
Okay, so insurance is all about protecting what you have.
Exactly.
And then for folks who maybe are looking to build wealth more aggressively,
Okay.
there are things like investment accounts,
Yes.
like brokerage accounts.
Right. So these accounts give you direct access to the financial markets.
So this is where you can buy stocks.
Stocks, bonds, mutual funds, exchange traded funds, all of that stuff.
Wow.
Yeah. So it's a lot more hands-on
Mm-hmm.
than, say, a mutual fund
Right.
where you're relying on a professional to manage it.
Right.
But it also has the potential for higher returns.
Higher risk, higher reward.
Exactly. So
Yeah.
it's really important to do your research
Yes.
before you jump into investing on your own.
Or to get some advice.
Or to get some advice. Yeah. Talk to a financial advisor.
Okay. And then finally,
We've got business loans.
business loans.
Yes.
Okay. Now, this is something that maybe not everybody listening
Right,
is
yeah.
going to need.
Not everyone's an entrepreneur.
Right. But if you are,
This is a really important one.
right. So what are business loans all about?
So a business loan is essentially a loan that is designed to help businesses either start up
Okay.
or expand their operations.
So this could be for anything from like,
Inventory equipment, hiring new employees, marketing.
wow.
Yeah, anything really that a business needs to grow.
So if you're thinking about starting a business,
A business loan can be a really valuable tool
absolutely.
to help you get off the ground.
Okay. So as we've seen,
We've covered a lot.
there are a lot of different financial products out there.
There are.
And it can feel overwhelming
It can.
to know which ones are right for you.
Right.
But the important thing is to just start educating yourself.
Absolutely.
Do your research.
Talk to a financial advisor.
Yeah, and figure out what's going to help you reach
Your goals.
your financial goals. So whether you're just starting out,
Or you're a seasoned investor.
there's always something new to learn
Absolutely.
about the world of finance.
And it's always changing.
It is.
So it's important to stay up to date.
Well, this has been a fantastic deep dive. I feel
Well,
like we've
Covered a lot of ground.
covered a lot of ground.
Mm.
We've really gotten a good overview of the landscape
We have.
of financial products.
And hopefully this has given our listeners a better understanding
Yeah,
of what's out there and how they can use these tools to their advantage.
absolutely.
Yeah.
Now, here's something to think about. What do you think is going to be like the next big thing
Ooh, that's a good one.
in financial products?
Well, with technology evolving so rapidly,
Right.
I think we're going to see a lot more innovation in the fintech space.
That's financial technology.
Financial technology, exactly.
Okay.
So I think we're going to see things like, more personalized financial advice
Okay.
powered by AI. Yeah. And I think we're also going to see more and more people investing in things like cryptocurrencies. Crypto, yeah, it's a whole new world out there.
It is. It's exciting.
It's very exciting.
It's also a little scary.
It can be.
But, that's the thing about finance.
It's always evolving.
It's always evolving, and so we've got to stay informed.
We do.
And we got to keep learning.
Absolutely.
Well, this has been fantastic. Thank you so much for joining me on this deep dive.
Thanks for having me.
And for everybody listening out there, keep exploring the world of finance.
Keep learning.
And we'll see you next time.
See you later.
Bye.